Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Friday, October 15th, 2010. Well, folks, a wild day on Wall Street today. Today is Friday, which is options expiration, so you know there's going to be some volatility here as you have pullings from Google earnings, from economic reports, from Ben Bernanke speaking this morning, as well as institutions trying to push key stocks in certain directions to make sure that they close where they maximize their profit. Remember the games of options expiration. A stock will have a certain amount of puts on it and a certain amount of calls. That strike price where they'll be able to maximize their premium is where they're going to want to close that stock. Always remember that, folks. That's why I will never hold any options into options expiration, because of those games, as well as understanding that I play options very rarely because it is a rigged game. I'm here to tell you the truth. No hype. That is our motto, folks. No BS, no hype. We're going to lay it out for you. I laid it out over the last previous videos about what's going on with Ben Bernanke and the Fed. They want to monetize the debt. Why? Because think about this, folks. We had Ben Bernanke on TV today talking about a weak dollar policy. Dollar was lower. It has since reversed, unbelievably rallying higher. Looks like we might have a short-term bottom on the dollar. Take a look at the intraday chart here on the UUP. Unbelievable. The gap down this morning, right there to gap fill, surges up, pulls back, surges up again. We're hovering basically at the highs of the day on the UUP, which is the dollar index. But again, going back to monetizing the debt, think about this. Can we pay off our debt? No. What's the one way to do it? You print more money, therefore that debt is worth less. We can more easily print it and pay it off. All right. In addition, think about this. All right. Can we cut spending to reduce our debt? No, you can't do that during this type of recession. Can you tax people? No, you can't do that. That is why they're monetizing the debt by printing money. In addition, they're creating that false wealth effect. Now, in the scheme of things, it's going to be an ugly scenario, and it drove me nuts today, because essentially what Ben Bernanke said, and I'll put up the chart here, folks. Ben Bernanke on TV today, as he was giving his speech, basically said, listen, whenever you have inflation, you generally have a good market, you have a good job market, everything's good. Yeah, and I thought to myself, I said, well, that's kind of interesting, but I can't really agree with that, because it's more so, and listen, this is just my opinion, maybe I'm wrong, but I look at it as this. It's like asking what came first, the chicken or the egg. Did the good jobs market, did the good economy cause inflation, or did the inflation cause a good market? I hate to say it, folks, but I'm in the camp that thinking that when you have a good environment, that's what causes inflation, not the other way around. And to be betting this market's and this world's and this country's future on this and printing trillions of dollars, which ultimately, as we discussed yesterday, will be limiting and hurting the fixed income retirees, the baby boomers that are retiring, as well as everyone in this world's, or in this country, I should say, their buying power. It is a risky proposition. Very risky. What if the economy does not improve and they continue to print money? All of a sudden, you get hyperinflation and no growth in 3 years. Do you know what catastrophe that would be? That would be the ultimate catastrophe, folks, and we're on that course in my opinion. All right, going to the markets. What happened this morning? Again, market gapping sizably higher after Google came out with unbelievable earnings. Now, the interesting thing about Google has been one of the hated stocks recently by analysts. If you look over the last 6 months, and I scan out here, folks, you can see this is your chart on Google here. On your daily chart, you see after the beginning of the year at 600 and change, it got pushed all the way down here. Then it kind of went around sideways. It rallied a little bit on this latest market rally. They blew away earnings estimates yesterday. The stock, notice where it's trading, right up here. If it continues up, this is where it's going, back to 2010 highs at approximately $630. But right now, this $600 level right in here is going to be a good resistance point. That's where you currently are trading, right in here. All right, that's number one. So that sent the technology spiking after hours and helped the futures a little bit. This morning, Ben Bernanke's comments sent the futures higher as well, as the dollar was very weak. And then again, we got economic news. CPI. CPI showed no real inflation. What does that tell us? Well, yesterday PPI showed a lot of inflation. PPI is producers. CPI is consumer. So what that's telling us, folks, as I go back to the SPY here, and we'll go back to the intraday, is that there's no inflation yet on the consumer side, or not much anyways, which means it hasn't been passed through. Now, eventually it will be passed through. Producers, as their costs increase, and their inflation, if inflation goes up, therefore the producers' costs increase, they will eventually pass that through to the consumer, as they're not going to take the cut on their bottom line. Trust me. All right, just like asking if Goldman Sachs is going to take a cut. No, of course they're not. They're going to pass it along, make their customers take that as well. So that will eventually come through. You also got an NY manufacturing index, which was good this morning, and retail sales, which were good as well. However, market gaps up this morning and starts to sell. Why? Because the dollar starts to rip higher. I just showed you the dollar chart before. The dollar ripped higher. Markets collapsed. By the way, 1, 2, 3, 4, 5, 6 down here. That is a key webinar statistic, folks. I gave it out in the chat room today. I didn't tell people what it was, but I said, for those of you that took the webinar, you should see something here. And the webinar, by the way, we're giving it again tomorrow, Saturday, 1 p.m. Eastern Time. This webinar is on key, all right? Be ready for it. If you don't take it, you're insane. That's my personal opinion. Just alone, this one play today for this bounce could have been taken. And again, those of us in the webinar or that had taken the webinar in the intraday stock chat nailed that play. Right there, paid for the webinar, if not more. Bam, done. And that's just one of the key proprietary things that we don't reveal in the Research Center or in the chat room that, again, will make you sizable money. So you want to take that webinar. Again, take it. It's tomorrow. You can sign up at inthemoneystocks.com. Seminars, webinars, and education link. Now, as the market sold off here, again, dollar bottoms here, dollar tops here as the market bottoms. Notice the double bottom, perfect double bottom. We talked about that as being a signal as well as the webinar. Plus, you have a two-tail theory right here. That's another proprietary technique, two-tail theory, that tells you to go long the market. Market rallies up, goes, where does it go? Right to this blue line. Bam. There's your shorting opportunity. Market pulls back. Where does it go? To the 200 moving average. Bam, buy it. There's your bounce right now. Play the levels. Be in the intraday stock chat if you're an intraday person. If you're an intraday person, or if you're not an intraday person, I should say, and you have an hour a day, you should be in that chat room as well for the learning experience and to gather this information, folks. It will pay you back tenfold, a month, in my opinion. All right, now, going on to a couple other things. As the market is hovering here, we're really on the flat line. The Dow is getting weak today. The Dow is definitely weak. The Dow was strong yesterday, but the Dow is down about 55 points. GE, again, reported earnings this morning. That was very weak. GE earnings, look at the stock. GE down 87 cents, 88 cents. It looks like the foreclosure crisis is getting worse and worse, folks. It is just an unbelievable mess. Over 100,000 foreclosures last month alone. That's more, I think, than ever, if I remember correctly. And the key is now, again, JPMorgan getting hammered today. I mean, these stocks are getting brutalized. Just since earnings, JPMorgan gapped up on earnings on Wednesday, over $40. Today it hit a low of $36.50. That's a 10% drop on JPMorgan alone since earnings. These foreclosures are just continuing to mount, folks. And now there's problems about they have to do a foreclosure moratorium because they have to look at the paperwork again. But there's just more and more mounting out there, more and more people that cannot pay their mortgages. And this is literally a crisis that could be on the headline of the news soon. And you'll see it more and more, folks. These banks are going to take billions more in losses on this as it continues. It is an unbelievable situation. Be ready for it. Be understanding of it. This is, again, going to drive these banks. Now, the banks are due for a bounce. I called it out. Actually, I said at 37 today. Actually, 36.90 was the buy on an even number piece. It actually went to 36.54, but look at the bounce since then. It was a beautiful play to the upside as JPMorgan bounced. Beautiful job there for those of you that caught that in the intraday stock chat. Now, a couple other things. Goldman Sachs is the one stock that's really not getting hit too much here, most likely because they're not as exposed to the foreclosure mess as JPM, Wells Fargo, Citigroup, and Bank of America. Bank of America, I mean, this is just an ugly chart again. I mean, look at the drop over the last few days, basically from 13 and change all the way down to 11.75. Another 10+% drop there on that stock. Now, other stocks in motion today. GE, we talked about. Google earnings, we talked about. What else? Chevron and Exxon are both lower slightly. JPMorgan, I told you, is getting hit. But Google is leading the charge. What's keeping this market afloat today? Google, Baidu, Apple, Amazon. NASDAQ 100 stocks very strong today, folks. Absolutely strong. Google's leading the charge here. Apple's also helping. Apple has earnings on Monday, up $7.75. An unbelievable move here ahead of earnings. Most likely factoring in earnings, though, I have to say. I think, honestly, on earnings, they may get a small bit higher, but not much. And there is a chance that it could fall because it's being rallied up into that level right now. So, again, we'll have to see, again, how this plays out on Apple. But it's just a beautiful move here. We'll, again, watch very, very closely. All right, what else do we have today? What else is moving in this market? Basically, again, folks, you want to look and remember it's options X. My guess is if we go back to the spiders, again, getting a nice bounce off this key trend line as I zoom in a little bit. I think the market's going to end pretty much flat today. The dollar, even though it's stronger, it's options X. You know, by the afternoon on a Friday, they're not going to really pound this market to the downside. I don't see it at all. I think this market, again, is going to end flattish on the day. NASDAQ's going to be positive because of Google, and you're going to go into the weekend in a happy mood for those spenders out there, those consumers that they want to make sure are out there spending. Understand the game, folks. It is rigged. The markets are rigged, of course, but it's up to us to play the rigged system so we know what's going on. Join the Research Center, you're going to get the inside track. Join the chat room, you'll get even more of an inside track. Take the webinar, you know our proprietary techniques, you'll be making money hand over fist, in my opinion. That's at least what I feel like. Take care, have a great rest of the day, great weekend. I'll talk to you again soon. Take care.